Hello everyone, I am Rupinder from Wall Street Accountant, and we have John Sachdev. He is a buyer agent and he will help us to understand in and out of real estate industry.
Hi, Rupinder. Thank you very much for giving me the opportunity to come on screen and talk to you and giving me the opportunity to discuss about my services.
John, could you start by telling us a bit about what a buyer agent does and how you come to specialize in this area?
So that's a good question, Rupinder. So what a buyer's agent do? Like we represent the interest of a buyer in the real estate transaction. For example, if you want to go and invest in real estate, what you will do or what most of the people will do, like they will go onto the realestate.com.au, they find out some property and they will speak to the seller's agent. So seller's agent is working for the seller. So whatever you speak to him, whatever discussions you have with him, he will try to get higher price for the transaction so that he can give more benefit to the vendor because he's getting paid from the vendor. But in case of buyer's agent, what we do, like we represent the interest of you or the client as a buyer, and we do all the research and we try to find out a high performing real estate asset for the client, which will perform in a good manner in future. And moreover, we specialize in finding out high performing real estate asset, which gives a good capital growth over the time and gives you a good cash flow so that it doesn't put a lot of pressure on your pocket and doesn't put a lot of pressure on your finances. And our research is totally based on the data driven approach.
That's really informative, John. Okay, John, I understand that your approach is heavily data driven. Can you explain what that means in the context of the real estate investments and how it benefits your clients?
So it's a very good question, Rupinder. So regarding the data-driven approach is like we take a lot of factors into consideration when we are doing the research for a property for our client. So there are more than 25 factors which we take into consideration. I'll give you some examples like bushfire zone. So we take into consideration like whether the property is in bushfire zone is away from the bushfire zone, or the flood zone. We want to make sure that the property is not coming in the flood zone, the crime rate in that area, what kind of crime rate is going in that area, and what kind of infrastructure is coming in that area, the job opportunities in that area, what sort of vacancy rate is going in that area, and how much is the rental yield. So depending upon clients requirement, we do a lot of research and we try to find a good real estate asset for the client so that it gives them a good capital growth over the year. So when we do our research, we make sure the property which we are finding has got both the components. One is the capital growth and the other one is the cash flow. So capital growth, like it is like a game. Like if you are into a game and you want to increase your property portfolio, so consider this as a game. So capital growth and the cash flow. Capital growth helps you stay in the game and the cash flow helps you in exiting the game after 10 years or 15 years. We want to make sure that our clients are accumulating a lot of properties in their acquisition phase so that they can buy more and more, and in later down in the track after 5 years or 10 years or 15 years they can exit out of the game and can be financially free. So if the clients have bought 5 properties or 10 properties in another 10 years or 15 years, after 15 years they can consider selling 5 out of 10 or 2 out of 5 properties so that they can pay off the debt for the other properties and become financially free. So this data-driven approach helps us in finding a good asset for the client so that they can take a lot of benefit from the capital growth as well as from the cash flow of the growth.
John, I know that the market analysis is crucial in real estate investment. What key factors do you consider when analyzing potential properties for your clients?
So as mentioned before, the key factors which we take into consideration when we are doing the research for the property is bushfire zone, flood zone, infrastructure, what kind of amenities are there, what is the land to asset ratio, and regarding the rental, how much percentage of the renters are living in that area, and what kind of neighborhood is there, what kind of rental yields the client will be getting if they wanna buy that particular property, and what is the demand to supply ratio in that area. I'll give you an example. I'll take you on my screen and we'll show you some parts of the reports which we do for in our research for our clients. I hope you can see my screen now. So this is a one of the reports for one of the area I have done for my client in past. So we see how much is the population, what percentage of people, like what percentage of occupier, or how much is the percentage of the renter in that area, how the dwellings are going, the sales of the house, how is it increasing for the last 5 years or 10 years, and coming to the next, like what kind of activities are going, how many houses has been sold, and what are the prices they are being sold at. This is for the units, the same thing. This is kind of the market activity snapshot. So how the rental is going, are the rents increasing, and how what's been happening with the rental increase for the last 12 months or 5 years or 10 years. So we consider a lot of factors in our research to do a report for the suburb and to do a report for the property in the area. And this is an example of comparing different suburbs in the area, like compared four suburbs, for finding out like which suburb is better as compared to the other ones, and what are the pros and cons of investing in one suburb as compared to the others. And we do a proper cash flow for the property before we ask our client to go and buy that property. So in cash flow, we take care of everything, like how much is the rental, expected rental from the property, what kind of the expenses are there, what are the insurances, what are the council rates. We take into consideration everything so that we can give a good estimate of the cash flow to the client before he goes and purchases that property. And that cash flow analysis reports gives them the idea about next 5 year or 10 years, how the property will perform by taking into consideration the growth of the area or the inflation rate into the account.
I just want to know, could you share a success story where your guidance significantly benefited a client in their real estate investment journey?
Yes, I would like to share one or two of my clients' results in here. So I'll take you on my screen. So if you see on the screen, like this is one of the properties, recent purchases, like I think November or October last year. We bought this property for our client. It was bought in region Queensland. The client was from New South Wales, Sydney, and the purchase price for this property was $505,000. And we did get a revaluation of the property after 4 or 5 months, and the value of the property came out to be 540. So there was straight away uplift of the value from like 505 to $540,000, which is like roughly $35,000 in 4 to 5 months. Sorry. So this property was bought at $505,000, and the rental he's getting per week is $595, which will get increased after 1 year, surely. The size of the property was 620 meters square, which is a big block of land. And the configuration of the house was like 422, 4 bedroom, double bathroom, double garage. So if you see, like the client has got 6.9% capital growth roughly in 6 months. So this is how the clients take a benefit from our research, and they can get a good capital growth as well as good cash flow. And one of our other clients, like he bought a property with us in Western Australia in Perth, and he was after a good size block for which has got development potential. So we acquired a site for him which is like 1800 meters square roughly, and it had a house on it. So the house is being tenanted already, so he's getting a good rental from the property, and he has got the development potential, so he can build at least 6 to 8 units there whenever he wants to build those units in future. And recently I heard from him that he's been offered, like he bought it at $642,000, and he's been offered roughly $799,000 for the same property after 6 or 7 months. So this is how the capital growth has worked for him. He's not considering selling it, but he's been offered $799,000 for that property.
I have so many questions, John. My next, what are some of the most common challenges your clients face when investing in real estate, and how do you help them to overcome these?
So most of the times I've seen the client face the challenges like they have got the money, but they don't know like where to invest that money. They don't know like which are the areas that will perform better for them as compared to the areas which have already performed better in the past. And the other challenge I think the clients face mostly is like they get very emotional when they are going for the investment. Like they consider the things with the emotions. What I basically tell my clients to keep the emotions away from the logic. If you connect your emotions with the logic, then you will not get good benefits. So when you are investing, you should always go by the logic only and see with the data-driven approaches like how much are you putting and how much are you getting from the investment and what are your future goals. And sometimes clients say that their friend has invested in the property in that area 10 years before and he has got a good gains, or he might not have got the good gains, but you need to consider that he invested in the area 10 years before, but you are investing now. So you should consider what is good for you now and what kind of areas are better.
How do you tailor your services to meet the specific needs of individual clients, especially those relocating to Australia?
Yes. Okay. Yeah. Regarding tailoring services, like we always listen to the client first, like what their goals are, what they have got there in mind, and what kind of strategy they want to go for. Like for example, there are a lot of clients who are earning good money and paying a lot of tax, so they want to save their tax. So we tailor our approach as per their needs, and we try to find out where they will get the capital growth. They can compromise with the cash flow so that they can save a lot of on the tax. And some of the clients come to us, they want to have the capital growth as well as cash flow. And third type of clients, they want to go for the cash flow first, and later down the track in their strategy, they switch over to capital growth plus cash flow. So if you have got a client, or if a client want to go for a cash flow, we go and find out the properties which will be giving more cash flow. So this is how we tailor our approach. So it could be a mix of capital growth and cash flow, could be cash flow only, or could be capital growth. So it depends what kind of your strategies and goals you're working.
So, what trend do you see emerging in the Australian real estate market, and how are you preparing your clients to make advantage of these trends?
Okay, regarding the future trend, so what's happening in these days now, people are very educated. They see a lot of things on the social media. They are very educated in the area. So what they do, like in previously, most of the times people used to invest in the properties, and their accountants used to suggest them to invest in negative gearing properties, like going for the negative cash flow so that they can save a lot of tax. But now the trends is going is like most of the times people who want to free themselves from the work or from their 9 to 5 job early. So they want to get retired in early stages rather than retiring at the age of 65. So most of the times they want to go for good properties which give them good capital growth and cash flow. So if you are getting a cash flow, good cash flow, positive cash flow from a property, so it means if you're getting, for example, 5,000 or 10,000 from one property, and you can build up at least 5 or 6 or 7 of those kind of properties. So what happened in like 5 years or 10 years time, you can replace your income roughly, like if you are earning $100,000, so you can replace your income with the income you get from the properties and get retired early. So this is the trend I'm seeing in the clients now. They want to get retired early. So this is how we tailor our approach, and we try to find out the properties where we can help them in getting their goals and reaching to their goals faster.
John, your tagline mentioned united efforts. Can you elaborate on how collaboration plays a role in your services and the benefits it brings to your clients?
So as mentioned in tagline, united efforts, it's like kind of collaborative efforts, which like for our decision making, we take into consideration all the feedback from the clients. So we talk to the clients each and every day. We present them the properties, we tell them the positives and negatives of the property. And for every decision making process, we want them to give their feedback and want to make sure that they understand before finalizing their property.
Okay, finally, what are the key piece of advice would you give to someone who is considering investing in real estate in Australia today?
My key advice to the clients who are interested in starting their property journey is, if they are sitting, don't sit on the sidelines. If you are ready, you should go and invest in the real estate. Go for buying something. Don't wait for property prices to fall, as most of the people are listening from the media, because the property prices won't fall that much. But if you are buying something today and holding it for longer time, you will surely get a gain, and this gain would be a good gain for you, so that you can invest and get more returns from your investment, and can go up to the property ladder to make yourself free and get retired as early as possible. As someone has said somewhere before, that the best investment on earth is earth. So my advice to everyone is, like, start considering real estate portfolio in your journey. Start investing as soon as possible. Go onto the property ladder, invest more and more, and try to get good returns out of your investments and get financially free as soon as possible. And in the end, I would like to thank you again, Rupinder, for considering me, for taking me on this call and expressing my services to your clients. And if anyone is interested, they can contact me, go on to our website. And for the timing, I would say happy investing to everyone.